Hello, traders. Thanks for joining me today. It is Wednesday, the 18th of December, 2024. We're excited to do this. We do this every year. It's on our annual Fireside chat. First things first, let's see if we can get a quick mic check, make sure we're loud and clear and everything is good. You should also be seeing the screen that says 2024 Fireside Chat, Trading Trump in 2025. Just confirm if you would by looking at, by responding in the GoToWebinar chat in front of you. I want to remind everyone that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The opinions shared here belong to the speaker and are not necessarily the opinions of Convergent Trading and its officers. Past performance is not necessarily indicative of future results. Okay, so here's what we've got in store for you today. We're going to have a few guests on. We'll have, first, we're gonna start off with the famous Jared Tendler, performance coach, an aspiring professional golfer. And we're also going to have head trader John 471. Those of you who recall might have seen his opening swing videos. He's a head trader at Convergent, professional trader for some time. And then there's LordSeanConnery, Rob Cimino. He's a product leader at Convergent Trading, and he is also our CL or crude oil expert. For some reason, my smartwatch thinks I'm going for a jog. Anyway, so that's where we are. So a quick reminder, first of all, welcome aboard, and then a quick reminder of what Convergent Trading is. Convergent Trading, you can get more information at convergenttrading.com. Convergent Trading was created in 2018 or launched in 2018, and its purpose is to provide the same quality of training, education, community as we experienced running a prop shop or working at a true prop shop, not a funding program, but a prop shop. And our goal is to bring this online and to make it available to all traders so that you know that the people talking to you are people who've kind of been through it. For myself, I'm Futures Trader 71, Morad Askar. I started out as an equities, high volume equities trader, day trader, and then I moved to futures after 9/11 in about 2002, late 2002, moved to futures and traded in a prop shop. And then in 2003, I started my own prop firm in the Chicago Board of Trade. I'm a licensed trader as well on Eurex, as well as a member of CME Group, and been doing this for 24 years. So let's get on with it and get Jared here. Jared, will you join us? We have Jared Tendler. He's going to pop in here in a second. Jared, thanks for coming on. So I want to quickly go over what you've been working on, Jared. And I wanted to kind of run some issues by you, just to, you know, put you through the.
Are these your issues, Morad? You want to? Is this a personal thing here?
It's It's private. Is this HIPAA compliant?
Yeah.
So first things first, I wanted to just make sure everybody knows about your free worksheets. They can get those at jaredtendler.com/worksheets. Also, Jared runs his own community under jaredtendler.com/TMGT live. You can join that. Always, Jared put out one of the, what I believe is the best psychology, mindset / performance products out there. Check out his books. And what I wanted to start with today is to say, you know, the theme of this fireside is, of course, we just had this big election the results, of course, surprised a lot of people. And what it does is,
Not the betting market.
what's that? Not the betting market, right? Those guys are pretty, we're pretty on it pretty early.
Yep.
Millions of dollars have been made. So we had a Trump presidency from 2016 to 2020. And during that period, headlines, tweets were a source of volatility. So we expect volatility, we expect surprises. This is the style of that president, a lot of talk. And so what happened was, during that period, there was just a ton of news-driven activity. So you might be in a position that you've been waiting for all morning, you get in there, and lo and behold, there's a tweet that says, we're sending ships to North Korea or something like that, or the ballistic tests should end and we're gonna put the Navy next door or something. And
Closing the border.
yeah, suddenly the market tanks, crude oil shoots up, all that stuff. So given this, if I were a client of yours and dealing with this kind of environment that we're coming into, how would you advise a trader to stay level-headed or to take advantage of this type of action? What would you tell them?
Well, I mean, first, if the defense is not that strong, then you got to worry about that first, right? The old adage, defense wins championships, maybe, but you can't win a championship without a good defense. So I would advise anybody listening to look at the common mistakes that you have in volatile markets in general. And if you were trading, 6-7 years ago, you have some idea of maybe what you might be dealing with now if you haven't made significant progress in terms of your mentality over that time period. Because in situations like this, it's rare that new issues pop up. It's more that existing issues get magnified, right? So if you're somebody who is, liable to, succumb to FOMO or to revenge trading, or, to have a hard time, taking losses, accepting your own mistakes, even if it was, not necessarily an objective mistake, all of those issues are going to get magnified. So you got to have a very clear understanding of what issues you're likely to deal with and have a plan to deal with them, period. And if you don't, then to me, you're not playing good defense. To take advantage of the upside opportunity, right? That's kind of getting into more of the intuitive side of things, which you're not really going to be able to do reliably if, on the one hand, you have to continually be monitoring your own internal emotional state to avoid succumbing to those problems. Intuition is a very powerful tool for those that are capable of identifying it accurately and utilizing it and properly manage the risk around it. But I think it's dangerous for newer traders, right? If you've been trading for less than 18 months, intuition is generally pretty dangerous, mostly because it's not really reliable yet. You don't have enough experience, right? Intuition relies on a lot of hardened skills and wisdom and experience to be accurate. And so you need to have a baseline level of experience, for that. But a lot of traders who are more seasoned still can, think that their, let's say, fear of a particular opportunity is intuition, when maybe it's actually more fear of revenge trading. Because in a volatile market, if this position reverses and stops you out, having been down on the day and having been struggling over the most recent few days, you're gonna just lose your shit, right? And you're gonna make a lot of mistakes thereafter, and so the fear in that moment may not necessarily actually be market-based and intuitive-based. It may be, no, I'm actually playing defense and protecting myself. So being able to kind of firmly distinguish real intuition from emotion masquerading as intuition is an essential, I think, criteria for having a good offense here and being able to take advantage of the opportunities that will come your way.
So a quick question, by the way, to our audience, please plop your questions in the GoToChat box. JC, one of our CT team members, will interrupt and throw those in for Jared or I. Of course, Jared is the focal point today. Intuition, how do you place that at around 18 months of experience, I know that that's not a hard rule. How do I accelerate my ability to pick up and learn, gain that intuition? Is there something I can do to more quickly become intuitive?
You have to work towards achieving mastery for the more basic elements of your style, or of the mechanics of your trading. So what a lot of traders, newer traders, do is they are in constant consumption mode. They're voracious. They want to learn. They want to get better faster. And so they're just like kind of constantly consuming content. And what happens is your mind kind of gets filled with a lot of information. And under normal circumstances, you're well rested, doing decently, right? There's not a lot of emotional volatility. You're going to be able to utilize a lot of it. But what happens is if you get tired, you get a little tilted, get a little anxious, a little burned out, then you start to lose access to that information. And so what ends up happening, right, is that you're sort of knowledgeable about a lot of things, but masterful about only few. And intuition demands that your mind is clear. You need space to be able to be more sponge-like and absorb market-based information and have that kind of interact with your hardened skill set. So what you need to do sometimes is take steps back, consolidate the knowledge that you've been learning, turn the spigot off of the new information, and spend time really internalizing it so that it becomes more, kind of rock solid. Like I want to be able to wake you up at 3 a.m. and say, tell me the basic mechanics of your system and what makes it profitable. And if you can't do that in 30 seconds, having been woken up in the middle of the night, then you do not yet have mastery of those basic elements yet. And so when you do, then your mind is automatically more clear, more open to be able to receive information, rather than it being kind of clouded with, a lot of that kind of knowledge base. Not to mention, right, we're also dealing with a constant barrage of sort of intraday information, of which, right, you have to be more of a curator in terms of what you're allowing to kind of enter your psyche, or enter your mind and become part of that pool, right? If you're, too much on Discord groups or checking Twitter too long, which, again, I'm not opposed to either of those things, but when we think about the consumption of it, what is really valuable that's going to lead towards making high-level decisions, accessing intuition, versus what is kind of like entertainment and sort of ancillary, and not really kind of filling our minds with the right stuff to make those decisions.
Okay, so first of all, it would require defining your process. What is the process of, let's go to golf, your area of expertise, or one of your areas. How do you tee up the ball, where you put your feet, how you practice your swing. That process for every drive has to be exactly the same, and it's just repeated and repeated, which in some books that's called focused deliberate practice. And that has to be repeated so many times that it's kind of moved from that thinking mind to the intuitive mind, and it just happens on its own, like walking or driving.
So this is a really, really important differentiation. Moves from the conscious mind to the instinctual mind, right? Driving a car for all of us is, at least if you're over 17, right, is very instinctive. It happens like this. Intuition, can also happen like that, but it's the byproduct of brand new information, brand new insights and ideas. It's more of the innovation, the creativity, right? So I can be incredibly athletic on the golf course, right? I can, play a course I've never seen before in conditions that are kind of challenging. Actually, I had this earlier this year. I won a tournament, in the springtime, and this was one of the coolest putts I've ever made. We were playing in crazy conditions. It was like 25 to 45 mile an hour winds. And I had a putt downhill, and the wind was ripping like up the hill. And I saw somebody behind me from about 45 feet, and his putt was kind of rolling down the hill, and you could just see the wind. It was like a wall. It just like hit, on the putting green. Usually people are used to, the golf ball blowing around in the air, but on the ground it can really be affected also. And so I had about 25 feet for birdie, and you know, I just kind of had a sense of the degree to which I needed to hit the ball harder based on what I saw, based on how I felt like the wind was. And I was so focused and athletically responding to what was in front of me that I made the putt, right? It, you know, had a little left to right break, and you know, it just went in perfectly. It was, again, one of the coolest shots I hit all year. That's the basis of like the intuition, the sensation of what's happening in the mind. And I'm able to do that because the basic elements of my process, as you were kind of alluding to, were so well hardwired. I didn't have to worry about where my feet were, how my shoulders were, you know, and ultimately like how I needed to hold the club and take the club back, you know. But when I get over a 3-foot putt that doesn't really break at all, like that's just pure instinct. You're just getting up. There's not a lot to it, and you just sort of hit it semi-robotically, right? There's a little bit of sensation about it, but you know, for traders, right? There are your bread and butter trades. There's stuff you could do in your sleep. You don't even have to have your coffee in the morning. You sit down, you see this thing set up, and you're like, ah, right? And it's like nothing. But then, as we're talking about, when you know there is more volatility and there is things happening in the market, and you're maybe having to utilize indicators that you're not often utilizing, but you just sort of sense something, and maybe it's, you know, linking to something you saw 6 months before, 2 years before, something you heard maybe in one of your interviews, or some of the things that you've talked about here in Convergent trading, and all of a sudden that you have a sense of what might be right. You're not 100% sure it's right. You're not even sure why you think it's right, but there's a strong feeling for it. That's more intuition. Instinct is unconscious, hardwired, and it's yeah, it's old. Intuition is brand new, also pretty unconscious, and you know, not really that kind of tangible. That's the difference. And I think a lot of people kind of use those words interchangeably, and to me, they're diametrically opposed in that regard.
That's really interesting because I've been using intuition in a way that that opposes what you just said, and what you just said makes a whole lot of sense. That intuition is based on new information, instinct is just repeated information. I'm curious while you're talking, I'm like, would he have made that putt again on the second try?
I mean, probably not, truthfully. I mean, if I, because the wind conditions may have changed, maybe now I was like, oh man, I made it. Now I kind of know what I'm doing. And so as soon as you sort of have that expectation, your senses start to get off. There's a little bit of luck involved too.
And
You know,
that's trading in a nutshell. You know, you catch a runner on a day like today where the S&P's moved 200 points, and you think you've cracked the code, and then the next day you come in and give it all back because you really haven't. Going back to the 3 a.m. thing, what you had said, somebody's asking about that. What did he say with regards to answering a question at 3 a.m.? And what you said was, if you have to know your process so well, your edge so well, that if I woke you up at 3 a.m. and asked you what your edge is and why it works, then you should be able to answer that in 30 seconds flat without blinking. That's what he's saying. That's how familiar you have to be with your edge. Okay, so
and if you can't do that, then you can't really reliably access intuition, let alone, you know, you're certainly more vulnerable to market volatility in those moments.
Okay, so let's take a look at some of the biggest problems we've kind of come into. We do these group mentoring sessions for members at Convergent Trading once a month. Folks come in, they describe what their issue is, and the head traders and I will kind of try to diagnose and prescribe some way to push through. One of those issues that's quite common is, I have a plan. I know what I'm supposed to do. Heck, I might have even done the Accelerator Program at Convergent, paid pretty good money for it, done the program. I know what I've got to do. But you know what? I just have this inability to follow my rules that I've set for myself. And we run into that issue a lot. Let's ask the traders here. How many traders have rules, know what you're supposed to do, but you can't get yourself to stick to the rules. Just say me or I or yes or something like that in the chat box. Let's make this a little bit more interactive. So the question to you is, what's that?
Maybe the face palm emoji.
Yeah. So the question to you is, how do you address that issue if it was brought to you by one of your trader clients?
Well, I think the beginning of it, just to kind of connect with what we were just talking about, goes back to your statement of, I know what to do. And so the question is, do you intellectually know what to do, or is it hardwired? And we all know the answer to that question. It's not hardwired yet. So, how well established is it in your mind? Because if it's like, I know it like a nice acquaintance at work, then yeah, you're gonna not be able to execute it consistently, because you're gonna go into the live market and it's intense. There's gonna be more emotion involved, not just because you're not 100% sure, 100% sure, not because there's a little bit of weakness with your tactics, but because the market is intense. I mean, your goals are on the line, your money's on the line, your future is on the line to a degree. Like, you're in the most competitive marketplace in the world. It's intense. So yeah, that knowing starts to become vulnerable. And this is why athletes struggle under pressure, right? Even the ones that are incredibly well skilled. So that knowing is fudgy. You need to spend more time, making sure that you are really internalizing that system and that strategy and that process and the ways in which you're evaluating trades, and make it more cold. Okay, now let's assume that's not the issue, right? That the knowing is actually pretty deep. Maybe it's not like totally mastered, but it's like, I'm on board here. There's only two reasons for it that you're going to violate those rules. One is your energy is too low, right? You're just kind of coming in flat. You're trying not to care as much about the money. Maybe, yeah, just early in the day, you're not really at your best. Whatever, your energy is too low for a variety of reasons, or your emotions are too hot. Because in either of those situations, your higher brain function, right, the part of the brain that's responsible for thinking and planning and making decisions, is not operating at an optimal level. Like when it is like spot on, I mean, you're going to be able to translate those thoughts into action. You're going to be able to translate the training that you did and into action. There's sort of no friction between that. But when, again, energy is too low, emotions are too hot, you start to lose access to it. And so, yeah, that's sort of the kind of basic overview. I think what a lot of traders generally, and I see this not every day, but every week, I interact with traders who do not understand the extent to which emotions are impairing their judgment and blocking their ability to perceive the market accurately, or to perceive certain positions, or even perceive themselves, and the ways in which that affects their ability to execute. They see the lack of discipline. They see the violation of the rules. They know what they ought to do, but they're not seeing the way that the emotions, whether it be fear or FOMO or anger or overconfidence or lack of confidence or greed, is actually blocking them and kind of forcing their hand to violate their rules. So if there's one thing that you can do better, it's to start gathering data around those points in time where you're struggling. And one of the worksheets I have on my website, called a data collection worksheet, it just provides some basic parameters for how to collect the relevant data, so you can start to see your emotions, kind of in more raw, real-time form, so you can make a sort of a different, create a different outcome. That's by far the biggest mistake traders make, is falsely assuming that they're struggling with discipline, right? Because they see the violation of their rules, that you're not disciplined enough. Like, if you're not disciplined enough, that generally means you're lacking enough energy. You're not lacking enough kind of mental strength to be able to adhere to what you're supposed to do. But by and large, emotions have the power to completely override that and cause you to violate your rules in a very, very different ways. It's rarely am I seeing discipline issues. It's much more so that we're seeing emotional issues that traders have no idea exist, because frankly, no one wants to think about their emotions, right? We want to just go trade and do the fun stuff, but who wants to deal with this emotional crap, right? But it's there, and you actually have to deal with it.
Well, if we don't talk about it, it doesn't exist. So that's how it works. So three components there. The first component is know what you're supposed to be looking at and focusing on and executing on as cold as you can. Number two, make sure that there isn't a physiological issue, meaning you're just too tired to stop yourself from over clicking the mouse and trying to trade in the middle of everywhere. So these are cases where, for example, for my own traders, if there's a death in the family, a broken relationship, an argument with your significant other, your dog is sick, whatever, those days always cost me money as the person whose money is being traded. And we would just, as soon as I find out about those things, we have a quick talk about it. And I'd say 7 out of 10 or 8 out of 10 times it results in me saying, just go home and just locking the account. And then the third piece is just not knowing that there's some emotional factors there that are likely to sabotage or get in the way of seeing things for what they are. Okay, so I know we could talk about the emotional part, and I'm sure that'll be a 6-hour TED talk because there's a lot there to unpack, like things like that we've come across in the Accelerator program when we talk about the psychology of trading and mindset. Things like, well, how do I stop having FOMO, or how do I stop being afraid, or there's so much there to deal with. I mean, are you an anxious person? I'm sure you have the mental game of trading handles that through the mapping process and things like that. So again, I want to point everybody's attention to jaredtendler.com/worksheets. Here's this free resource that's available. Go get them and try to do that. You know, it's hard to change your process, but try to do those for 5 consecutive days. Heck, do them for a day and then do 2 days and then get yourself to do 3 and so on and so forth just to get started. The second question I had for you, you had something?
Yeah, so in the data collection worksheet, I have found to be the most simple and kind of like most powerful relative to the simplicity of it, right? It's like kind of the highest ROI for your time, because when you're kind of actively taking notes in the way that it's sort of outlined during the trading day, it gives you a chance to separate from that emotional reaction. So it's so easy to react and just like kind of have whatever comes next feel justified, whether it's FOMO, whether it's fear, right? Closing a position too early, entering another one quickly. Like both of those things can happen so fast. You create just a tiny bit of separation from those actions, and suddenly there's an opportunity for some control. There's an opportunity to do something different. And again, it's crazy simple. Just do it. Like we need a little Nike here. Just try it out, as you said. I like that. Just do it for a day, do it for 3, do it for 5. If you don't learn something, I'll give you $50. I mean, it's like
don't make promises.
It's not possible for you not to learn something.
Yeah, and also we always talk about, if you take a loss, it's really, really important to get up. If you take a loss in trading, make it a habit, close the position or watch it take or stop. Just get up, cancel your orders, get up, walk away, refill your water glass or whatever. Just create a gap so that there isn't an immediate reaction to that loss. Oh, I'm going to hit it again, which is just the beginning of the cascading action of going on tilt. So the second issue that we've seen a lot this year in 2024 that we hope traders would focus on in 2025 to improve their outcomes is this repeated urge to find perfection in trading. This is a random, trading is a random outcome generator. And you have folks who are trying to perfect their losses out of their trading plan. Here I am in front of you. I'm a customer. I'm a client of yours. What do I do about this?
I have no problem with people who want to be perfectionists. Some of the best traders in the world, some of the best athletes in the world, some of the best performers, business people are raging perfectionists. But they are incredibly balanced in the way that they approach it. And what I mean is that their hard driving, insatiable desire for perfection is balanced with a ruthlessness with regards to how they correct, anticipate problems and mistakes and failures. Jordan was incredible in his work ethic and his desire to understand and correct what he was doing wrong. So if you have both and you understand how perfection in trading materializes over time, then I think you have a recipe that can work. But for the most part, traders have a bastardized version of perfection that is fanciful. It's an illusion of what they think could be real, which is like, I can win every trade, I can make money every day, I can execute my system with precision perfectly every single time. And I mean, that's just not realistic. Most of the traders I work with who are, 7-figure plus traders, I mean, they are constantly making mistakes, and they're working with me because they're ruthlessly attempting to fix them so it never happens again, right? And it's like, how many times do I have to make that mistake? Can I only make it once and really examine with great precision why I got seduced into jumping in this position today, right? And whatever it is, that is different than what I see on a day-to-day basis. There's this insatiable urge for perfection, because if I become perfect, then it's going to make me feel more satisfied and proud about myself. So that's sort of coming from a deeper confidence problem. I seek perfection because if I'm not perfect, well, then I'm going to get so pissed off because it's going to cost me money. I'm going to lose. I'm going to make mistakes, and the heck with that. So perfection is the answer. There's a variety of reasons for why perfection is attempted, and if it's not coming from a high performance lens or perspective, as I was describing before, then it's very, very dangerous. And it's also a really hard thing to fix, because you will inadvertently become perfectionistic at your attempts to fix your perfectionism. And so it's going to kind of keep trapping you, thinking like, oh yeah, now I've got it. Like, now I'm perfect with how I'm handling my perfectionism. And now you're not, clearly, because you're, anyway. So I posted a link in the chat here, jaredtendler.com/perfectionism. It's a blog that I wrote, and it outlines some of the basic elements of what I believe to be a very robust strategy to tackle this thing. Number one, you've got to change your perspective on perfectionism. So, this is a concept we've talked about before. So as I said, perfection is attainable, but it's also a moving target. So how do you hit a moving target? Well, you need to have your C game continually kind of rising higher, which then creates the conditions for your A game to rise even higher again. So perfection is not a static thing. Some of the fantasy-like ways in which we see it is like, I can envision like what it would mean to be a perfect trader. And once I get there, once I kind of make it, well, then I'm perfect and it's game over. It's like, nah, that's not what perfectionism is in a high performance practical way. There's an ever ongoing evolution to perfection. And we're constantly chasing it. The way to chase it is by continually sucking less and making sure that our C game, our floor is continually rising. So it's like ceiling rises, floor rises. That's what this thing has. Now, that's number one. Number two, oftentimes perfectionism is amplified by a feeling of lacking, right? We seek perfection to kind of make up for ways in which we, kind of feel like we're underperforming, and sometimes that's undeserved, right? I have worked with many high caliber people who have left industries, sold businesses, done very well in other areas, and come into trading. And they come into trading, A, with some high expectations of themselves, B, without a ton of appreciation for what they were able to do and how previously. And so they see trading as a way to replicate what they've done before, rather than it being a progression in their overall development as a professional, as a human being, as a person. And what happens is that when they struggle, they then feel way worse than they ever did in the previous environment. Why? Because those expectations are there, that lack of appreciation, that satisfaction, and they kind of have gotten used to externally driven outcomes, kind of band-aiding that weakness. In other words, you kind of need to win, you need success, you need validation, you need accolades from people around you, or from money, or from status in certain industries or businesses, in order for that satisfaction, pride, etc., that sense of accomplishment to be there. When it goes away, you got nothing. So in other words, we need to take that externally driven source and make it internal. And I kind of lay out a process in that blog on how to do that. Lastly, sometimes perfectionism is a byproduct of trauma, scar tissue, pain points of the past. And the way that this sort of takes place is that you have this old crap, right? Whether it's personal, professional, trading related, right? It could be as simple as like you've blown accounts, you've lost a lot of money, and now you feel like you're in a big hole. Well, how do you compensate for that hole? You become perfection. You reach perfection. That's a way of kind of counterbalancing it. That's the implied intent by seeking perfection, is like, if I can reach this level, then all the pain points of the past are just going to be washed away, and it's just going to be glorious, and I'll be forgiven, and yada, yada, yada. It's not going to happen. It doesn't work that way. There's sort of no amount of way we can sort of escape our past until you look at it, examine it, and correct it directly. And fortunately, when you do that, you actually learn a lot, right? This is not like the boogeyman of the past. It's like everything that you are kind of trying to avoid, you're sort of damned to repeat because you didn't freaking learn, right? Even as simple as, and I don't want to get too deeply personal, client last week who was dealing with something like this, was like, I didn't want to be like my dad. My dad, gambled, lost a bunch of money, put us in compromising positions, with regards to finances early in my life. It was chaotic and traumatic, and I don't want to do that. And so I've been desperately trying to avoid it. And well, what happens? You're just creating it in different ways, because now you're just blowing accounts, and you're operating in a very chaotic way in trading, and it's not really damaging your finances, because you have kind of locked up and preserved a little bit of security, but like, you're repeating the same problems. And so we actually had a fairly decent breakthrough in working through that old stuff to kind of see the value that his father had provided to him, the lessons that he imparted, both good and bad, and now started to learn how to create a new template for sustainable success that wasn't trying to not be like his dad, not do what his dad did, but instead create something entirely new, having had that experience. That's how you transform it. And so perfection is not going to do that for you. You have to do the work. But, people are lazy, and so we sort of see perfectionism as an antidote.
Yeah, as my therapist says, let's not run from something. Let's make a decision to run towards something better. If you're always running from something, you're very likely to just make a big loop and right back to it.
Exactly.
Because it's the only thing you see, and it's the only thing you focus on. So there's no way to get away from it.
Yeah.
Very cool. I know we have to wrap up with you here in a bit. I have one important question for you, and that is, what is a big breakthrough that you or one of your clients experienced in 2024? I know you wanted, the last time we talked to you, you wanted to get back into golfing and do the, you know, go through some tournaments and things like that. Have you had a personal breakthrough in 2024, or has there been a really outstanding breakthrough by one of your clients that you can share?
Yeah, man, I give you one client-wise. I'll give you one more client-wise, and I'll circle back to me. I'd say the other one has actually come from the data collection worksheet, and it's been a constant where people in the mental game of trading live in my community, clients of mine who start using that tool have woken up to the emotions that are affecting them that they had no idea existed, and then that gives them the option to actually start working on it. And it's been, yeah, probably the most consistent, because I think having created that community is kind of brought new people into my kind of purview that I wouldn't see, and at a point in their kind of mental game progression that I don't normally see. So it's early. I get to see those like kind of early, like kind of eye-opening experiences. And you know, the specifics kind of therein afterwards oftentimes happen after some big blowouts. One of the best things you can do if you have you know, a really bad day where you were responsible for a good chunk of it, is to do a bunch of writing about what happened. And there's been a number of clients who, and you know, people within the community who have experienced those big breakthroughs by what they were able to get down on paper and see very clearly what was happening. Whereas before it was just sort of this chaotic mess and they didn't know what they were doing with it. And it just kind of kept happening, again, because they couldn't see it. And so those were, you know, kind of some big general ones. On a personal side, on a golfing side for me, yeah, it was, like you said earlier, I was an aspiring professional golfer, or you know, 25, sort of 30 years ago. And yeah, derailed by my own mental hangups. Still in the back of my mind was holding on to the dreams of playing in a U.S. Open, winning a U.S. Open, and I wanted to give myself like a really good kind of opportunity this year to see how good I could get. You know, the tournament that I won early in the season was a big boost. I had a very interesting experience the following week, which was I got fitted for a new set of clubs. And as I jokingly told my wife, it felt like I found out that I had a brother. Okay, I don't have a brother. It was just like such an eye-opening experience to learn that some of the common missed shots that I would have, you know, specifically with a 9-iron and a 3-iron, were 100%, 95% due to the equipment being just like really wrong for me, and I was able to kind of adapt around it. But the bigger misses, what the clubs were not built the same as the others, and so to have, you know, a full set of irons that was like truly fit for me and also consistent, you know, really eliminated some big misses for me. And you know, I worked hard this year, played really well in the U.S. Open qualifier. The year before, I just was like firmly outclassed by the golf course. I just was not. I shot 82, had no chance from the beginning. This year I shot 74, missed, I think, qualifying by 4 shots, missed the playoff by 3, not outclassed by the golf course, had a number of really good opportunities. There's a par 5, 630 yards. I was just up near the green in 2, you know, had to, you know, really kind of man up and had to carry the ball like 240 over this creek. And I knew I was kind of on the outside, had to make something happen. So to hit some really kind of big shots and big moments was fun and validating. And the long story short here is that as the season went on, I sort of saw more pieces of the puzzle that I needed to be working on and was devoting more time to doing that. And there started to become this inflection point where even though I was getting better, I started to see that the relative return on my time and my investment was not giving me what I wanted. I was not having as much fun, even though I was playing better. It was like I started to kind of have the questions of like what am I doing? Like I'm not 19, 20 anymore, where I have no responsibilities, so I can do what I want. And golf was my life. I've got a kid, I've got, you know, a wife, a practice and a business and a coaching style that I love, fulfills me in ways that golf couldn't. Golf was really selfish, and it's cool to be selfish. Like I still has an important part of my life, but I think the breakthrough for me was understanding that I'm just way more than just a golfer now, and that needs to be reflected in the way in which my life is constructed. So now I'm going to continue to play tournaments. I'm going to continue to try to play at a high level, but I'm not going to practice as much, and I'm going to have more fun with it. And maybe that will lead me to play better. I don't think in an objective terms that that's the right way for everybody to play better. You know, you'd think that playing less wouldn't lead to it, but in this case for me, I think it will, because I'll be more aligned with what matters. And as long as I'm having fun and don't feel like at any point out there that I don't want to be there, then I just kind of have to play better as a result. So
I was going to say, it sounds like backing off might actually yield some interesting results.
it might. And the US Open local qualifier is at my home course this year. So
Just a side question for you. How many books do you have to sell to get fitted for a set of golf clubs?
so you can get fit for pretty cheap, but it's the cost of the clubs when you get them. That's how many books? Maybe close to 300. No.
All right, there's a question in here we want to get to. Richard's asking some advice for under trading. I tend to trade more on the hard rotation days and stand down on the easier trending days like today. What would your advice be?
Without clarity on why, the only thing I could suggest is that you have a clear idea as to why. Because I think if you did, you would have included that in the question.
Okay. And then one last one, Xavier is asking, journaling takes you out of the ego and allows you to examine yourself, and you can recognize lies that we all tell ourselves. I have a prep sheet that requires some journaling. If I also journaled the worksheets, it seems like it might be a lot of work taking me from focus in the market itself. How do you balance this?
Yeah, I think in the short term, it's a short-term, long-term thing, right? The journaling that you're describing might be a necessity because you're using it to band-aid some of the problems that you're having. But if you do the work that I'm talking about and get you kind of into my system to eventually work to correct the FOMO, the revenge trading, the fear, whatever it is that you're dealing with, you know, you will ultimately in like 3 to 6 months could have it firmly in the rearview mirror where you're not having to journal and, you know, occupy your mind with that kind of energy draining activity. You know, but if you're using the journaling as a way of kind of band-aiding it, then you're going to have to keep using it. Otherwise, you know, emotions are going to rise too hot. So I think the goal is not to use these tools long-term, right? If you break your ankle, you put a cast on it. And so that's kind of maybe where you're at now, but you don't want to have the cast on the rest of your life. It's not the purpose. The purpose is to help you to heal, right? And I think that maybe the outcome that you're after here is, you know, more about the correction of these problems, not the management of it, right? The management should be just a temporary tactic.
Very cool. That wraps it up for this segment with Jared. Again, we want to point you all to jaredtendler.com. The book is amazing, but also these free worksheets, as Jared had talked about, jaredtendler.com/worksheets. And of course, Jared's community, we welcome you to check those out. Jared, it's always a delight to have you on. I'm always learning something new, even after 24, going into 25 years of trading. Appreciate having you on and sharing your knowledge so openly. For 2025, I wish you an amazing new year. I wish you success in slowing down on the practicing, but still improving your handicap in golf, and of course, tremendous success in your coaching practice. Thank you for coming on.
Thanks, Marge. Always great to see you, and certainly wish you well, and certainly wish everybody here at Convergent Trading well too.
Appreciate it. Jared, you can hang out for the next segment, or you can drop off at will. In either case, we really enjoyed having you.
Awesome. Take care, everybody.
Okay, so let's move on quickly to the next segment where we want to bring on our very own John 471 and Lord Sean Connery. John Pieranunzi and Rob Semino, are you guys in here? Where are you? There you go. There's John.
Hey, everybody.
And Rob. Rob is he's in some he's on the Soyuz module orbiting the Earth.
He's in Scotland.
That's what it looks like. Yeah. Your mic looks like you're muted.
There we go.
There we go. Yeah. Thank you guys for coming on. So again, to our audience, John is our head trader. Lord Sean Connery is our product leader for crude oil. He's taken a step back currently to deal with some other some of life's issues, but he's very diligent about posting his levels every day in the Discord channel on Convergent Trading for members. And what we want to get into here with you two is to just talk markets. Okay, so I'm gonna just lay out what we're looking at or potentially looking at, and this is built on several inputs from several different macro and other analysts, pretty well-known people. So trading Trump in 2025, what has done well so far? The sectors that have done well so far: crypto, Tesla, the stock has done tremendously well. Palantir, the AI/defense stock, and the XAR, the defense ETF. You know, war is profitable. If you look at the defense ETF, if you chart the ETF XAR, you'll see that it just started to trend up just a day or two after the October 7th attack in Israel by Hamas and the start of that whole cycle. And then the other thing that is in focus hasn't really done well, but has kept in a range better than we had expected, which is energy in general. As far as what to expect, the focus will be on based on a Trump administration. The first and foremost is, of course, tariffs. This year, talk of tariffs is very likely to be on the news a lot, will be in our news feed a lot, and it has a tremendous impact economically. You can see that impact being priced in by simply looking at the Mexican peso, the Canadian dollar, both getting devalued because the expectation is both those countries are going to get hit with a 25% tariff each. And we're expecting that China will probably get hit with, or is what they're saying is 60% tariff. Now tariffs, if you're not aware of how that works, tariffs are essentially a national sales tax. It's something you have to pay as a result of consuming a product or a commodity that comes from a country that has tariffs imposed on it. It's intended to discourage the import or the consumption of that country's product, theoretically in favor of a locally produced product. A lot of these things aren't, the problem is a lot of these things aren't very quickly available to Americans. For example, let's just to say on January 20th, first day in office, boom, an order is put out that there's going to be a 60% tariff on Chinese products. Americans will have to pay that 60% tax until entrepreneurs can start producing those products domestically, or until those companies come here and hire and produce those products domestically. So that's one thing. Also, the other thing is traditionally the first 6 to 9 months of a presidency are kind of a throwaway period. They're generally not, they don't stay in focus. So what often happens is presidents sacrifice the first 6 to 9 months and do a bunch of stuff that has a quick political that win quick political points, but might generate some issues within the economy or the tax code. And then later on, those are dealt with. So that's the other piece, is probably a lot of big moves as soon as the new administration comes on to score political points. Most presidents do the same thing. The other piece is, of course, relating to Lord Sean Connery here, is drill, baby, drill, right? Screw the environment. We want to put the environmental requirements aside, and we want to open up drilling and so on, and that has a depressing impact on the price of crude oil and the price of gasoline. The U.S. is capable of tremendous supply, although it's hard to incentivize producers to produce. So those are the ideas. Those are the ideas behind what's expected to come in. Someone here is asking, Mike is asking, where does that tariff money go? It goes in the Treasury. It goes in the Treasury, but it does come from Americans as the consumers. So it has an inflationary tendency. So with those pieces in mind, what is it? Let's start with this year, 2024, starting with Lord Sean Connery. Your focus is crude. What has crude trading been like this year? Bring us all the way up to now. What is that? What have you learned this year? What have you been doing with crude trading? Can you give us a summary of where things are as it relates to that?
All right, you guys can hear me? Pretty good, good.
Yeah.
So I remember talking with my friends who are quants about 2024, just kind of sitting back and saying, all right, what is this going to be like with the election year? And we figured that crude was just going to be between $70 and $80 a barrel. If it got above $80 a barrel, was it going to stay there long? If it got below $70 a barrel, it didn't stay there long, and it just went sideways. Despite all the OPEC shenanigans, despite all the Middle East conflict, nothing's really driven crude oil like past $100 like back in for the Russia-Ukraine war. That was insane. That was I don't know if we're ever going to get that again, but who knows? Yeah, a lot of the stuff, a lot of the Middle East struggle that we see, a lot of the OPEC promising cuts and whatnot, that didn't really have such a gargantuan effect on pricing. It seemed like a lot of stuff was contained. One thing that I noticed about crude is, if you follow the auction, you follow spots where crude likes to balance here and there. Crude will just regularly visit in the past balance zones. Let's test a balance zone up here. Oh, let's test a balance zone down there. Just ping pong between spots. It's actually been quite a nice trade. I imagine like trend traders would probably pull their hair out and scratch their eyeballs out and just go nuts. But if you learned anything about the auction, if you've done the Accelerator Program at Convergent, or just even followed FT, in your trader bite for years on end, learning about the ES and how it auctioned. If you understand how crude auctioned, it really wasn't that bad. There was a lot of trading the edges of balance, very beautiful setups. And if you were patient and just kind of, sat there and waited for your opportunity, you did pretty damn good. So, oh my God, there's the chart with the crude going below zero. God, that was nuts. There were some people in Texas, this one guy who actually did my back patio. He actually bought crude futures sub-zero and tried to get them on delivery. They wouldn't do it. And he had a yard waiting for delivery. Like, yeah, I'm gonna lock up all these barrels and I'm just gonna sell them back. It was great.
What's he gonna do with all these barrels?
I don't know, but he's just got some massive amount of land in Texas. So it's great to talk to him about that.
There's all kinds of containment problems and decay, and oh my gosh, it's unbelievable. Yeah, but that's crude in a nutshell. I mean, you look at here's 2024 starting right here we put in a high, a back adjusted high of 88, a back adjusted low of about 64, and that's all she wrote. I mean, it's been, you know, if I move this over to where January starts, you can see the high and the low here, and it's been back and forth, back and forth. How are you trading that? Do you have opportunities in such a market?
Yeah, yes, there's always an opportunity. It just depends on how busy you want to be, and also what kind of trader you are. This doesn't look really good for traders at all. So you have to switch, you have to downshift, or you have to switch gears. You have to go into learning how to trade balance, which for the longest time I really sucked at. And until, you know, markets like Crude, when they are in balance, they actually worked out quite well. And you pick up new tools of the trade when you have to force yourself how to learn how to trade in balance. It looks like a great deal of a mess, but you know, when you, again, like, you just watch the auction, you watch for how we treat the edges of balance, and if you know, something doesn't look like it's going to bust on out, or the volume looks too crappy near a spot where it's going to break out, you just go back to using those rules, those long rules about trading balance breakouts, or trading the failure breakouts, I guess. So it's patience, really, because a lot of people, I would say a lot of people are really like, they just want to catch a trade, just take 5, 10, 15 stabs and try to catch something. But really, Crude has a lot of opportunities. It just depends on how you operate. If you're a scalper, there's plenty of spots where you can get like 10, 20 tick scalps. If you like to trade events like the EIA every week, there's always an opportunity there. And then if you're someone like me that likes to sit back and wait for a particular opportunity on a weekly level, there's always an opportunity. So it just really depends on your time frame. It really depends on how you operate in the market. Crude is, and the way it auctions, it's so clean. It's so beautiful.
Can you provide just a little bit of detail on not the weekly setups, but the intraday approach to trading Crude in general? What are the general pieces that you look at to make a decision as to whether you're going to be long or short? And what are some of the pieces you look at to decide whether or not the trade is valid?
Let's see. So, and again, like I've moved away from intraday, but if I were to go back and take a look at like what my approach would be, I'm always a fan. You know, we always like the market stats reports that you guys provide over at Convergent Trading. That's just amazing stuff. So, and you know, when we take a look at the overnight high and low, like that type of trade, you know, you're gunning for like a statistic that's like 90% plus chance to hit. Sam, also known as Transcending Futures over at Convergent, him and I would take a look at the pre-market and determine whether things look very balancy, and if we could fade one of the near the overnight level, like we try to fade the overnight low to go for the overnight high, or vice versa, depending on what kind of environment we were in. If we were in a few days of balance and it seemed that we can go ahead and fade one edge to go for the other and play a statistic, that's what we would do. If we were in kind of a powder keg waiting to explode and we had a breakout, we would always look to grab pullbacks to day generated DGPs, as you say, like the RTH or full session mid or VWAP, in a sense of a continuation play, whether it's a breakout to the upside or the downside. But yeah, the market stats reports have been exceptional. Now, even on the ES, the whole play toward the overnight high or low, play against the formation of a what's it called, a neutral day. That would have been that's probably the basics on how to set it on up. But how you would approach, how you're going to go ahead and set up on the day is really like if you've been following the story, day after day. So if you're looking at continuation for trends, you're going to be gunning for that continuation until you see otherwise. But if it's balance, yeah, there's always, again, there's plenty of opportunities there. The way that the time framing and just the way that Crude operates sometimes, it's just very beautiful, and you could trade, along those time frames that you would want to do.
And the reason you're saying it's very beautiful, Rob, is because it auctions in a way that follows your expectations, really, right? That's what it
Yes.
boils down to. You
Yeah.
expect it to move this far down, check this area, and nobody knows if it's true or not. If it holds, then it's likely to turn and check this other area, and so on and so forth. And that's really, because I say the same thing. I say this auction is orderly and it's just beautiful, or this auction is erratic and it's just awful. And it really is a reflection of my own expectations. But this is the market stat report that Rob is referring to. This is, of course, available to all members. You could see things in here like, the IB stat breaking, and that means pushing by at least one tick, the IB high or low. Look at how high that is in a historical probability. I want to remind you the past performance is not necessarily indicative of future results, but we're looking at 98.84%. Looking at data from November 28th of 2021 till November 29th of 2024, that's a really, really high probability that once the initial bounce, which is the first hour of pit trading, the pit opens at 8 Central, 9 Eastern, the first hour, it's likely to break that. And it tells you that there's, a 67% historical probability that it'll only break one side, and neutral is 33%. That means it breaks both sides. Things like that. Something as just that simple becomes a big component of a trade setup by looking, and you're leaning against facts. You're leaning against historical data, and really that's what Rob is talking about when it comes to the market stats report. Very cool. So now that we've got you on 2024, what's the expectation with the Trump trade in 2025? Even on your weekly setup, I mean, how do you make heads or tails of what might be said, what policy might kick in, what might be tweeted or put on Truth Social or put on whatever? How are you going to manage that?
I'm not really good at like following or putting my 2 cents in on like a macro picture. All I really want to do is just take in the most, I guess the most important information, like what comes across on the news. What are the big things, again, like the drill baby drill stuff. I mean, even if we were to open federal lands and start drilling like crazy, are we really going to see, prices be affected right off the bat? Because I mean, I'm not a specialist in terms of how like oil fields would be set on up, or how we can go and extract raw crude and then get it on the market. But I mean, that's going to do something for the future value of what crude would be. I mainly want to just pay attention to what are the catalysts that might drive up crude. Like again, more Middle East conflict. Actually, in the Trump administration, again, like I believe that he'd probably go ahead and put some stuff to rest out in the Middle East, maybe reduce some tension. So we're not going to see so many interesting little snippets on the news wire for anything that's going along out in the Middle East that is causing crude to pop up in price. Then it just really comes down to OPEC, whether the OPEC group is just going to go ahead and start making more recommendations for cuts, and they usually have like a decent monthly meeting where they'll just go ahead and just say, hey, we're going to go ahead and make cuts across the board in this many countries, and then you see oil just spaz out. So knowing that could hit the wire, I want to make sure to kind of get an idea, okay, price is going to go and move away from this zone. Where is it likely next going to test? And if it's going to come and test lower, test higher, are there trap traders from before, or are there some opportunistic prices to get in and out of? That's what I really care about. I care about what's going to happen when we go visit the next big powder keg that we were at before, and then see if a trade develops. So that's going to be my approach. I don't know about like, oh, is there going to be a new struggle where oil's going to be more than $100 a gallon, you know, or sorry, $100 a barrel, not $100 a gallon. Oh, wow, that'd be crazy.
That would be crazy.
No one's going to drive.
You also have a new theater in Syria with that kind of breaking open, so that's that'll be interesting. But you know, all of the macro analysts, which are like I kind of look at them as market weathermen. You know how the weatherman's like, oh, around 3 o'clock you're going to get this pressure here and it's going to rain and then it's off. And then tomorrow they don't talk about how it was off. They'll just talk about what's going to happen tomorrow, and it'll just keep going, and so on and so forth. Very cool. Okay.
We have a question for him. I don't know if you want.
Sure. And by the way, please plop your questions into the chat box in front of you. We'll take those live as they come in. JC here will interrupt and ask those. Go ahead, JC.
Yeah, so this is more of a personal question. It sounds like he's a swing trader with weekly levels. Does he swing options? Does he also trade first 2 hours and final hour primarily?
I do not do options. I can always go back to them, but I just don't. And then really my weekly trade is based on like full session. Sometimes I have to set alerts to notify me when particular levels engage, and sometimes I catch myself waking up at 2:30 in the morning and getting in front of my screen. So it's not about doing the first 2 hours of the RTH trade. It's really when price gets to a zone and what it's going to do there. So yeah, that is my approach. If I were to shift into an intraday basis, I would be looking at the 2 hours before the RTH session, 6 o'clock a.m. Central, just to see how the market's behaving. And then sometimes I'll go ahead and dabble around in the first two brackets from 8 to 9 in the morning on the pit session. I never trade the close. Usually I'm over at the gym getting destroyed by my trainer. And so I'll be on my phone. He'll just say, hey, let's go get another set going. Like, I'm just checking the price of oil. He's like, why? You don't have a trade on? I'm like, all right, fine. He calls me out. So yeah, I don't really stick around for the closing trade. I'm de-stressing at the gym. So.
Speaking of trading before the open, 2 hours before the open, John, you're also in Crude quite a bit. Your focus is ES and Crude. That seems to be an attractive time for you to be engaged. Why? Why do we often see trades from you in the head trader channel at that time?
Well, to be honest, I mean, Rob kind of hit the nail on the head. Like, if you're waiting for a specific trade, or if you have like some multi-day sequence of price action that you've been monitoring, and it happens to start the move you're looking for happens at that time, then I'll get involved as well. For me, it's really it's just kind of historical as well. Like, I started in a prop office, and we had to be there at 2 a.m. for the European Open. So I really, cut my teeth trading the European markets. And as a younger trader, I got to say, it was a huge advantage. Well, it was terrible to wake up at that time. That part was terrible. We'll get that out of the way. But I do think it was a huge advantage to be there at that time when you're like a newer, struggling trader, and get an opportunity to maybe put something on in what for me at that time I perceived as a less competitive market. And then, have an opportunity to then go into the open a lot more relaxed, maybe, more confidence. That was why I always traded during those times. But as of now, why do I still trade those times? Rob hit the nail on the head, because if the setup is at that time, I'll take it. You know, I'll look to trade that time.
Okay, you're mostly intraday though, whereas Rob is on a longer time frame. Well, let's hold that question for a second. Rob, since you're looking at big levels because you're looking at the weekly, how long are you holding these trades for on that bigger time frame now?
Oh, only to the end of the week. So my weekly trade, I can engage it as early as 5 minutes in the Sunday open. And if it goes for multiple targets, I get my risk off, I get my first target, and then it's just brew some coffee and wake up and watch and manage a trade. And sometimes it can go, I close it out by the end of, actually most of the trades I do in my weekly setup, I close out by Wednesday or even Thursday. So, and then Friday is just, hey, what's going on? Maybe I'll do some intraday trading. Maybe I'll just take the day off. Or maybe I'll just go ahead and just do some extra homework that goes into the next week. I don't hold over the weekend. No, no.
Do you
I don't
hold through the inventories report on Wednesday?
Yeah, yes, I do. Yeah.
You do. I mean, generally it just jiggles and kind of goes sideways these days anyway.
Yeah. If I were to have an executed trade and it doesn't have like a first target hit or even risk off, I will not hold over inventories. On an intraday basis, if I were to be holding over inventories, I want a good amount of distance away from my entry, because those things can move right back on you and just knock you out of your trade. So it's not worth it. Sometimes it's just better to wait for the inventories to come on out and then retake the trade if you need to.
Okay. One last question. On a weekly basis, what kind of an R factor are you looking at? Is typical for that time frame? Do you know?
It really depends on runner management, and again, like a sense of rules and also your stop. So I could run stops as tight as 10 ticks, sometimes 20. When I was developing my weekly system, there was a point where it had a 50 tick stop, and it was really ridiculous. I mean, that was just a lot, but yeah, under a sense of refinement, things get a little better over time. So the R factor overall could at least, I always try to shoot for like an R factor of 4 on an overall trade for the weekly, but I've seen that was when the stop was 50 ticks. That was kind of pretty big. But when the stops are a little tighter, because my way of entering is much more precise, the R factor could go much higher. But I also don't like to have restless nights of sleep, so I like to take off a good chunk of my weekly trade, a decent amount at the very first target, and then let the rest run. So the R factor can vary pretty wide, but some have been north of 10, but that's over a span of like 3 or 4 days. It's not like every single day you're knocking a trade out like that. So
Okay.
We have a question here for him regarding his holding period, I guess. Is swinging CL futures cheap overnight margin since it's a cheap product? So is the overnight margin cheaper? Usually, isn't the overnight margin usually higher?
I think so.
Meaning the overall margin though, I think. So let me look at the latest margin sheet here. For crude margin is $6,615 initial, $6,014 for maintenance margin. So that's how much you have to have in your account at the 4 o'clock Central or 5 Eastern close in order to hold a CL contract. 1/10 of that if you are in the micro. So that's what it costs. And in contrast, the ES is $16,000 in initial margin and $14,800 in maintenance margin. So that's, you know, crude is relatively cheaper, I guess. But that's not the reason you're holding it for that long. That's just your swing. You're swinging based on the time frame you want to trade at, not based on margin, right?
Yeah. For margin, I remember just talking with the broker, just saying, no, just make sure that I'm always at full margin. So not any 25% or 50% discount. Nope, just full. Just keep me comfortable. So yeah,
that's cool.
I never even thought about that. I don't even think that ever entered my mind, like trading a product depending on what your discount is of your margin, depending on if it's intraday or overnight. To each his own.
Okay, cool. Back to John here. Let's for a moment just discuss intraday crude while we're on crude. What is your expectation in terms of 2025, the Trump trade, and for crude, and then we'll pivot to the ES, the S&P minis. What is your expectation, John? Do you think you'll be more active in crude? Because you used to be a whole lot more active in crude earlier this year, and then your focus has shifted back to the ES with the higher volatility and going into the election.
Yeah, like we talked about this in the AP chat not too long ago. For me personally, you know, the ES is my primary product, and kind of the way I described in that chat, like I only look to other products when I have to. Earlier this year, I was a lot more involved in crude, and I mean, crude it's a fantastic trade. It's probably, I think, for the way we trade and auction-based, auction style trading, I think it's probably the best market, to be honest with you. S&Ps, I mean, I enjoy the S&Ps more, or I trade the S&Ps more. I think it has a lot to do with my background in interest rates, where I kind of, sometimes the S&Ps are a little bit thicker of a product, and some of the order flow is kind of more familiar to me. But anyway, I've ended up being more in the ES recently, just because even though we're near all-time highs, I mean, I've thought the ES trade has still been really good. There's still, there's moves that happen, they're tradable. The auction to me seems to be making reasonable sense. My scenarios, I seem to play out pretty well, and I get opportunity. So I've had less of a reason to look at crude oil. Do I think that'll change in the new year, after as we get into the new year? I actually kind of think it will. I sort of expect myself to end up trading crude more, especially during certain periods of the year. Like the ES, we had an incredible day today. We'll see what happens with that, what kind of follow through happens. So as long as we have moves like that in the ES, that's where I'll be. But I do see myself paying more attention to crude into the new year and as the year goes on, because just like I said, when the S&Ps are a more frustrating trade, a tighter trade, a more competitive trade, man, there are times where crude can just give you some very clean, very clear trades, some very structured moves, and it auctions just as you'd expect to. That's why I like to trade in crude, like very clear auction-based trades, usually for a stat, right around the top, usually around the pit open. That's why I really like to trade crude. But yeah, in a nutshell, I do think I'll spend more time in crude in 2025 for sure.
Okay, I want to just talk for a second about Convergent's Accelerator Program. This is something that John and I participate in, that Rob has also participated in as well. And if you are someone who's been in futures, has watched a lot of YouTube and followed many people and so on, and you're still not putting a good process together to build that intuitive sense that Jared was talking about earlier, the Accelerator Program gives you that opportunity. The Accelerator Program is a 5-week program, 4 weeks of content that you have to keep up with. You get a module every few days that you have to watch and do the work for. And then on the 5th week, there will be what are called the execution labs, and those involve a trader bite in the morning that goes into setting up the trading session, and then we live trade the whole week for about 2.5 hours in the morning, and then we have coaching sessions in the afternoon, or workshops in the afternoon. During the self-study portion, we have coaching sessions every week, we have AMAs, and then for the Accelerator Program cohort or alumni, we have a monthly gathering that we do on a month-to-month basis. I invite you to go to check this out. Of course, this is something that we put together and have spent a lot of time on, and it really is what we would put a prop trader through in order to get them to a point where we can back them. So this is what the program is built on. I would suggest you take a look at it. You can find it at go2ct.pro/accelerator 2025. The details are all on that page. Okay, back to where we were. So let's talk ES for a moment. I know there are a lot of NQ traders in here as well. NQ was wholly thin today. Wow, that was incredible. The S&P did drop about 3% today, and from the high, and was extremely volatile as well. These are quite unusual days. If we look at the ES here on the intraday, and you look at the type of day this was, I mean, we covered just a ton. Let me scroll back and tell you what that compares to. This is the election right here. So the election SOC is right there, 58.83 1/4. This was the election night. So from election night, which was 6 weeks ago, we have run quite a bit. Historical run up in the ES, historical run up in Tesla, and so many other stocks. A pullback, and then we've ground ourselves into a new all-time high at 61.81, and we took all of that back today, all of it. Okay, so we were only about 30 points from the election scene of the crime. So this is an incredibly unusual day. Not only that, but we had incredible volume, and you could see on my chart there are all these bubbles here. These are order flow indicators for collisions. These are a very important part of how I look at the market, how I look at the order flow. It kind of it tells me, using high quality rhythmic data, it tells me where orders that are resting get hit or lifted by aggressive market orders. It gives us a sense of urgency, and you can see the urgency was throughout the day today. The TPO chart for this also was quite busy. I mean, holy single prints. I mean, the whole thing is just single prints. All of this occurred, of course, because of the news. And this is why one of the things we make sure members have is CT News. This is a live news squawk with a text feed. And when we go back to when the announcement came, there were some really important pieces that came out with the announcement. It started out with the hawkish cut as a first headline, and then as Fed's chair started talking, it became very clear that the Fed might be coming into a pause here. Fed's chair Powell says that today's decision was a closer call, but the right call. Risks are two-sided, trying to steer between those two risks. And he tries to soften the blow a little bit. He doesn't do a very good job, as Fed's Powell never does. And he goes on to say that The Fed's going into a new phase, still meaningfully restrictive, closer to neutral and appropriate to move cautiously. Closer to neutral to the market, that means we might not see all those cuts back to 2% that we had hoped for and priced in. And then he reiterates this. So all of this occurs within minutes of each other. He reiterates that from here, it is a new phase. Again, this is new risk that the market doesn't like to hear about. When a Fed chair comes in and says there's a new phase and the curve has already been priced in into the future, that's going to shake some people out. And he said the Fed's going to be cautious about further cuts. It's no wonder we dropped 200 points in the S&P and 1,000 some odd points in the Dow today. But it's all here. We hear it. You can see that you can click to turn on the squawk, the squawk, so you can hear it via audio while the text is going. This is one of the features at Convergent. So we're getting close to wrapping up. I want to just talk for a minute and ask you both this question. As a trader, so we'll start with you, Rob. What is a big breakthrough that you experienced in 2024?
God, let's see.
You want some time to think about it? I can go to John.
Yeah, yes, that'd be good. That'd be nice.
What is, you've really done a lot this year. What is a big breakthrough that you experienced this year?
So for me, the big realization that I kind of came to this year, for anyone that's kind of followed me for a while, one of the big, trading errors that I battled through like 2019, 2020 through till really 2022 was tilt. And I used actually, a lot of Jared's techniques, his book, to kind of get that under control and allow my actual edge to express itself in the markets. I was successful in that. And just recently, I kind of went back through Jared's book, and you guys actually discussed it tonight. He was talking about how discipline, mistakes and discipline come about when either your energy is too low or you're already very emotionally aroused. And all of a sudden something clicked for me where I realized I have this error and I've had it forever. I call it the sleepwalk-in error. And I remember being in like a prop shop like years ago, taking losers for my first trade and kind of making the joke that like, oh, that's like a splash of cold water in the morning. And now, like, years later, I find a lot of times my first trade is very poor and it's almost like I'm sleepwalking in. And so I had this error called the sleepwalk-in trade. And when I reread Jared's book recently, and we got to the part he was talking about, I realized that what's happening to me is I've come so far with this tilt error where I would get too emotionally aroused, too too high, too elevated. And I managed to quell that. But now I have this error where I'm not emotionally aroused enough. And so from that, I kind of got to thinking, and I started to think about your emotions as a trader, almost like your oil temperature for like a race car. And so that was my big realization, was the fact that, okay, I defeated what I thought was this big demon, or I shouldn't say defeated, but I managed to kind of get the upper hand. But now I have this other area to suck less, as Jared would say, about how to identify and remedy when my emotions are not high enough. I know FT, you used to use a feeler trade in your style, and I think that the feeler trade was actually like the prop trader's home remedy for this, most likely. I didn't use feelers, but so that's going to be my focus in 2025 is to be looking at my emotional state throughout the trading day, almost the way a race car driver looks at oil temp, and to be monitoring it and to be aware not only of when I get too over my skis, but also to see if I can make improvements by bringing up times when maybe I'm a little too calm or too like disengaged. That's going to be my thing in 2025. I got much better at whenever I'm too over my skis now in 2025. I want to bring up that other side and see how much closer to complete focus I can get. That's my goal.
So you found your emotional value high, and you've worked your emotional value low, and you're trying
We
to
got to find the VPOC.
you're gonna find the VPOC in the middle.
That's what it is. Exactly. It's exactly that.
Have you, Rob? Have you had strokes of genius in terms of what you think your breakthrough was for this year, and to follow on with what John just answered, actually, without being asked, what you're going to focus on in 2025. So let's look at this year. Are there any breakthroughs that you might want to share with us?
Yeah, it was actually patience. Patience was a big one, because like when I first learned how to trade futures, I first learned how to scalp, and it's like when you look at charts, when you look at your order flow charts or your book map, and you just see all these little spots where, ooh, I could trade here and here and here. It's a recipe for just over trading, and it could be good and it could be bad. And actually, it's probably more likely bad than good. You know, I'm getting old. I just turned 45 this year, and I like to think of myself trying to downshift and slow down. And so what I really aimed to do earlier on this year is to take a more relaxed approach and be a little more patient to, you know, wait for the weekly trade, as I talk about with my buds, and not just taking a look and like, you know, I'm going to give a shot here. I think this might work out. Oh, this looks good enough. No, just literally, I've got my bands, my levels all planned out. If price is not here, if it's not even coming within a threshold of my area, I'm not doing anything. Just going to sit back, not going to just roam around the house and do nothing. I have to be at the helm, like all hands on deck, waiting for something. But I'm not going to touch the keyboard. I'm not going to go ahead and click on a trade. I'm not going to, like, you know, it's so tempting to just, you know, do a feeler trade. I'll put a contract out just to see what happens. No, absolutely not. So having the patience to await some of my areas to engage in has really been nice, because then it allows me to slow down and not feel like there's just this unnerving, like this itch that I just need to get in a position, or like I'm in a fear of missing out, you know. And sometimes, like if I also, there's another thing that I worked on. If I have an alert that goes off that a price area has engaged and I missed it, and I wake up but I can't get the crust out of my eyes, I gotta go check, and it's moved away from where it's not, the entering a trade just doesn't justify the risk, I just let it go. Before I would think, no, I gotta catch it. I missed it. I've got to get it somewhere. No, just let it go. Tough titties. So I was gonna say tough shit. Oh well, I said it. I don't want to do that. I just want to be very disciplined and say, you know what, I'm just gonna let it go. There's always gonna be an opportunity. With Crude, there's plenty of opportunities. So
What's on deck for 2025?
In terms of what I want to do, I want to just continue to hone that skill, continue to just take that approach and just be nice and patient. As much as I love, and when I take a look back at the statistics ever since I've been doing this trade since 2023, early 2023, some of my best trades end up getting in like on Sunday night, but that doesn't always happen. But I'm always there, ready to go. But if it doesn't happen, I have to be okay and say, you know what, I'm going to get to bed, set an alarm, you know, and just see what might come up the next day and the next day. By Wednesday, if nothing happens, there's always some intraday opportunities that happen Wednesday, Thursday, or Friday. But
and there's always tomorrow.
Yeah, exactly. Yeah. If you miss out on an entry because, I don't know, you had a stroke or something, or just something just didn't click in your brain, you just looked at like a deer looking at headlights, like, oh, what should I do? It's not the end of the world. You just let it go, say, hey, there's going to be another trade. So
That's
Okay.
what I did this afternoon, by the way.
Watch the market just drop.
To be honest, yeah, I didn't get a
This
piece.
afternoon is the byproduct of my breakthrough for 2024. So if you were here for last year's Fireside, my target, I tend to be involved in too many things and I tend to spread myself thin, and therefore my trading suffers. You know, life was a lot simpler when I had 30 traders and all I did was come in and herd sheep. There weren't sheep, there were lions, but you know, that's all I did. I just came in, I did my morning thing, kind of like a trader bite for them, and I would just focus on my trading and then whoever I'm trading for the day. Now, so much is going on. One of the key things I keep going back to is simplifying, taking my hands out of things, and so on and so forth. So, you know, I can't call it a breakthrough. It's still a work in progress. I did step away in April from doing something I've done for 12 years, which is the trader bite, which really takes a toll because it's got to be done at 8 Central, 9 Eastern every day. I try not to miss. It's tough for me to get back into it after a holiday or whatever. And it was basically controlling what I was doing in the morning. And it got to a point where I just wanted to be able to take my kids to school sometimes or make breakfast or whatever. And I couldn't do that. So that was my first item that needed to be on the chopping block, is to stop doing that trader bite. So that was a bit of a breakthrough. It's a, call it a 12-year addiction that I was able to break, much to you know, 60 or 70 email complaints about how could I do this? How could I abandon everyone and cut out the trader bite? For 2025, it's more of the same. I'm involved in other areas now to do with trading, and my goal is to try to make it so that when I participate, it has a very high impact. Otherwise, I don't need to participate. And I'm also not getting younger, and it's just I've got to focus my energy on those things that move the ball the furthest. And it's really great to have folks like John and Rob involved in a community to keep things moving for members and to keep members focused. So those are my things. So we're going to wrap up, but first thing I'm going to say is this is your chance to ask any questions. If you have any questions, pop them in until the questions start coming in. If there are any, I want to make sure you know that you can always get more information about Convergent Trading by going to convergenttrading.com. And of course, JC and other members of the team are happy to field your questions and requests. All you have to do is email support@convergenttrading.com, support@convergenttrading.com. Let us know if there's something we can help with. But you know, it's Convergence. It's not just another influencer, educator kind of money grab. We really, our entire focus, and this is something that I've been working on for a long time now, our entire focus is to bring to traders what professional prop traders get, which is the ability to communicate, the ability to be guided by people who know what they're doing and are in this professionally, rather than somebody who woke up and started a YouTube channel. And you know, to think in a probabilistic way using our market stats reports. We rely on those quite a bit to know what's happening in the moment through our CT news, to keep up with the members and what the market is doing by having our weekly Tuesday trade talks, our AMA sessions the first Thursday of the month, our group mentoring sessions the second Thursday of the month, our study halls. once a month as well. The Trade Right program, which is included in your membership, in the quarterly membership. And what that is it's a mini program that you can take and get done at your own pace. And of course, the Accelerator program, which is really the professional trader training program, which starts in the next cohort starts January 15th. And I think there's a discount until January 2nd. And then after that, the price.
January 1st.
What's that? January 1st?
Yeah, January 1st, 11:59.
Yeah, and to get information on that, just go to the link that JC just dropped, which is go to ct.pro/accelerator 2025. I don't see any questions. Do we have questions, JC?
Apologies, I muted myself there for a second. We do have one question. I like the idea of a feeler trade. If you trade 3 lots normally, what is a feeler?
John, you want to take that first?
Sure. If you're normally a 3-lot trader and you're going to use a feeler, which may or may not be a good idea, it would probably have to be like a 1-lot. It would have to be a trade that is like something that is very, because here the idea of a feeler, like what we were just saying, is if you come into the day and first off, you're an active trader, you have to be someone that has a lot of executions. That's normal. 5 to 7 at least or more a day is who this is for. And then you come into the day and you're kind of, you're not too sure what's going on. You might just buy or sell something with a 1-lot, and just the impact of being in any trade, your senses are going to be sharp, and all of a sudden you're going to be paying attention. You're going to be reading the market a little bit better, and maybe you lose 2 points on that 1-lot. Maybe you make 5 points on that 1-lot. Regardless, what happens is you get sharper by virtue of being in a trade. I wouldn't recommend you do this unless you're very consistent. I've never done it. I would do similar things, but I wasn't that kind of trader. But that's the effect. That's what it does. FT, I think you did use a feeler at times, right?
Yeah, it's mainly for scalpers or people who have an idea of what direction you want to go in, but they don't want to commit. And so you put a feeler out and then you watch how that's being treated by the market. And sometimes your feeler will, as soon as you put it on, it just becomes obvious which way the order flow is going. You can train your eye by looking at the DOM to pick that up without putting a feeler out. But the thing is that when you put a feeler on, you can see it. You can see the market go against it quickly and then come back to scratch slowly. And it gives you an idea that whatever direction your feeler's in is probably not a good one. Not recommended with anyone that doesn't have a lot of experience, but a feeler is a good way to start building a position in line with your process. The process is the anchor to the whole thing. Thank you for that question.
As market makers, it was more whether or not we were getting fills. That was our feelers. Like we'd be putting up the orders like, oh, wow, I'm actually getting these. What's going on?
Yeah, that's not a good, that's usually not a good thing when you get them.
It'd be like, whoa, well, I shouldn't be getting these.
Very cool. Anything else, JC, before we cut out?
No, I answered the last question.
Very good.
Just for the public to know this, the last question was whether this is going to be on YouTube. It will be available on YouTube for everybody to view freely.
Very cool. I want to thank you both for being on here with me, and I want to thank the audience for joining us this evening. This was a fun talk. We love doing this every year and just getting in touch and chatting about our expectations for 2025 and how the year's been in 2024. I wish you all a fantastic holiday season and an amazing new year. Hopefully 2025 more than exceeds your expectations, whether it's a new administration or whatever. We do hope that it's a healthy and comfortable year for you, and hopefully you'll reach some, if not all, of your trading targets and potential in 2025. Of course, we welcome you to join us at Convergent Trading. If not, you can always catch me online on Twitter or X as Futures Trader 71. And again, if you need information from Convergent, just point your browser to convergenttrading.com and your email support@convergenttrading.com. Thank you both for coming on and spending the time with us. We appreciate you both.
My
Thank
pleasure.
you.
Thank you.
Cheers. We're going to cut it out here. Thank you all for coming in, and we'll catch you at the next one. Take care.